look at history, if you look at previous outbreaks of a similar nature, there was a recovery 3 months after the worst of the crisis. If you look at SARS in 2003, 3 months afterwards, 3 months after the worst, the MSCI was up 16%. Hence, there could be opportunities from the carnage in the markets. If you look at the market from a 3-month perspective, we should not panic excessively.
Right, there's also that sense that it's very different now from 17 years ago during the SARS outbreak, though. I mean, given China's position in the economy and the value chains, the size of the economy even, I don't know how much history can tell us at this point. Is this uncharted territory that we're looking at?
We are at uncharted waters, there's no doubt about it. However, we are not in a pandemic level just as yet. The number of cases, according to some accounts, is plateauing, and we could see a containment around the corner, according to some sources. So we should not panic excessively. I do take the point that the Chinese economy is much more prominent in the world economy than it was the case in 2003, but that in of itself shouldn't take us to completely sell off some very core holdings in that market.
Yeah, you're pointing out that this market is a place for opportunity as well. Where would that be?
The opportunity would be in two sectors: the meat stocks, as well as some of the general consumer discretionary stocks. I have picked the meat stocks because a number of them, such as WH Group and Cofco Meat, have had a double blow. Last year you had the African swine fever. Now you have the Wuhan virus, also known as COVID-19. This has caused, in many cases, for some of the meat stock to fall by over 10% from the position prior to the crisis. Hence, there could be opportunities, as this is a very core sector, given the protein consumption growth in that emerging market.
But don't the markets on the mainland tend to be quite speculative? How do we differentiate between the risk and the reward and whether it's worth it at this point?
You need to look at it from a secular 3-year perspective. China is an emerging economy where people are becoming more prosperous. When companies or countries become more prosperous, there's an acceleration in meat consumption, and that sector is particularly exposed to an upturn if the virus is contained, because it seems to be oversold at this point.
Nirgunan, if I could just shift the focus a little bit, we also have our eyes on the situation in Malaysia. How keenly are you watching that? Are there key technical levels on the ringgit that you are keeping an eye out on, for example?
The Malaysian situation needs to be watched very carefully, as the internal dynamics of the coalition could create havoc in the market. Having said that, the Malaysian economy is exposed to an overall rally in some key commodities such as palm oil and rubber. So we would be positive on both the economy and the currency in this juncture, because we see palm oil and rubber prices, as well as a number of other key commodities that are relevant to that economy, rallying in the current environment.
Do you see the depressed oil prices that has been the trend for the past few weeks amid the hit to demand from coronavirus as helping the current account positions of some of the currencies like the Indian rupee or the rupiah, for example?
Yes. Now, in the case of India, the most important factor in the current account deficit is, as you correctly pointed out, the oil price. If that price continues to be relatively depressed, it's positive for India at a time of intense economic uncertainty with the trade war.
Are there any other sectors of the market that you think we should be watching out for?
You need to watch out for sectors that are exposed to a turnaround. And as I said, the Asian consumer discretionary sector could rise even more rapidly than the overall market. Using the SARS as a background, 3 months after the worst of SARS, the consumer discretionary sector was up 18%. So we could see a lot of opportunities as the situation unfolds.
We're seeing all these higher highs and lower lows, volatility in the market. How much should we be placing our faith in central banks to continue supporting these rallies?
Central banks are looking to lower rates to support the market. There is an overall trend among central banks throughout the region to bolster the market in the time of such uncertainty. This will create opportunities in the market. It also creates difficulties for companies that are exposed to the depreciation of their domestic currencies. So if a company has excessive foreign debt, that could be problematic if the debt is in a certain currency.
Thank you for that. Nirgunan Tiruchelvam, Managing Director, Equity Research, Exotics Capital.